Okay, going to make a recap on today's trades. I didn't make a video yesterday. A couple of reasons. One, it was a break-even day, so not super exciting to share that. Though we'll go through a couple of those trades towards the end of this video. And also, I went to sports training, and I was exhausted after it. Shows what a few months of not doing sport does to you. So I kind of took the evening off from trading and ended up just coming into the day a bit fresher. Um, Ends up being an okay day today. I think I made check actually, like 150, 160, a little bit less off the borrows. Borrows a little bit expensive today, which is good. I mean, it's a green day, which is nice. The slightly frustrating thing is there was one legitimate trade opportunity, which I took, probably not with quite enough size because it was so expensive to short. And then a couple of not so good trades took the nice $200 mark away from that. So, bit of a shame with that, but still a decent day. I'll go through the watch list. I won't go through in too much detail, but I was watching CELZ to see if we could push, take out these highs, and then roll over for a short. I was watching GMPX as one of my main watches. It's had this massive move higher. A bit of a choppy day yesterday where it tried to sell off initially and then bounced towards the end of the day. So looking to see if that can continue. IMMX, this one I'm waiting for it to take out 868 before getting in short. I think this is probably quite swollen with a lot of longs and shorts, so it's probably just very crowded and very choppy for a while. LIXT was gapping up a lot, and it was an opportunity for me to test something slightly new out. NTRB was another stock that I had as a main watch. We've had this big move higher, a couple of days where it held. It did take out $10 again yesterday, so we might have induced a few buyers. So I figured under 815 this could really start selling off. And then RELI, which unfortunately was very expensive to short today, so I didn't take any shorts. This was probably the one that I look back on I'm most frustrated with because it was a tiny loss on it, which we'll go through, but it ended up giving a really nice short setup, and I really don't want to stay away from longs for a while because the edge there just isn't very clear at all for me right now. So with the trades, LIXT was the first one I took, and actually took this one pre-market. I spoke with a new contact yesterday, and he just shared with me a little bit of his approach to shorting. And he said that if you're trying to short the first green day on a gap up, you need to short into spikes. There's no real backside you can short because it will rip higher, pull back, and then chop. And if you don't have a good average, you're just going to end up short, get covered, short, get covered, short, get covered, and so on. And you're just never going to have a very good average. Your risk reward isn't great, and the win percentage drops. And I think that's really true from if you look at a lot of stocks that gap up. It's quite difficult to capture a backside move, which is why I tend to stay away from them on the short side. I've never tried really shorting into pops, and it's not something I'm going to jump into straight away and take any decent size with, but I will try that out a little bit. So the thought process on LAXT was that the $3 mark, it's a whole number to start off with, so it's going to be natural support resistance. And what I really liked is that it was back here, a key level of support, and then resistance during this consolidation area, and it's pretty close to this spike up on here. So $3 I identified as a potential area where it could run into and reject. Where I screwed up with this one was essentially to make this strategy work, you need to have a decent enough entry. So I think a better approach would be when it rejects 3 and it's just chills out for a couple of minutes, the entry would probably be in the 290s. I didn't get in until like 282 down here, thinking that's the top. And then I stopped out at the high of daybreak. So it's tiny lost like $25. It really doesn't matter the dollar wise. It's more just gathering data. And it looks like I was on track with this. I had the right idea at least. I think the way that I probably should have approached this is waited for the open and see how it then reacted at 3. If it spikes through 3, there is a formula that my contact shared with me, and I'm not going to share it here because it's a bit unfair to share his stuff, where you can estimate roughly where it's likely to spike to, and if it rejects in that area, you can also take it short. So a couple of ways to approach it. Once it's sort of like spiked through 3, pull back immediately, test it again. I think this is a good opportunity to say, okay, we'll take it short, we'll risk off the highs. If you had a 298 average, 297 average, you're risking 15 cent, and the pullback to 250, yeah, it would have been a 45-cent move. So 15, yeah, 3 to 1 on the maximum risk, and who knows, maybe yeah, there's a way that you can cut the risk. There's certainly a way I like to do it. So um, there's potential in there to trade something like that. As I said, I got in around here in this consolidation and stopped out a high of day. Tiny loss, so it's not the end of the world. And then RELI, like I said, this one I preferred the short. We've had a couple of days up. We've been testing out this $10 area. If it continues to test and fail, opportunity for a short. Shorts were expensive, so it wasn't ideal. I ended up taking it long, pretty small position size. I got 50 shares in here. And I always know if I'm trading something that I shouldn't be trading, if I go, well, I'll just take like a $20 risk and maybe I'll make 60 bucks out of it. As soon as I have that mindset and take that, I've probably made a bad trade. And this falls right into that category because I took 50 shares around 928. I added another 70 through 10 and then stopped out on this little pullback here because the way I would like to approach longs and breakouts, it's not something I really want to be doing much anyway, is get in expecting a short squeeze, and if it goes, great, and if it doesn't, just get out. So I took like a $14 loss on that. So the two losses today added up to like less than 40 bucks. And then the one winner I took was on NTRB. And this was a really nice trade. This 815 level was a lot higher than maybe I gave credit to. It was the low from this day here. It was also the support area on day one. Yesterday, obviously, we held above that. But that 815 level is pretty key. What I was waiting to see in this was an attempt to push higher and for longs to try and come in and just give no indication that they were strong enough, which we had eventually. It tried to take out high of day and failed. Although it isn't really a false breakout, this for me was a pretty clear indication that there was weakness. And once we got back onto VWAP, I jumped in short with 200 shares at 847, right in here. I would have taken maybe a little bit more had shorts been cheaper, but they were about $10 per 100 shares. So paying 20 bucks is the absolute maximum I like to spend on shorts. So I cut the risk down a little bit accordingly. So I probably only had $70 of risk on this, and that totaled about $90 when you include the borrows. And again, I didn't add because of that reason. Had I taken the sort of size that I'd like to, I only had 35-cent risk, so I'd have probably taken 250 in here. And then when we came down here to add through low of day, I'd have seen it's a case of, well, I have 15-cent risk on my 250 shares, which is like less than 40 bucks including fees. So I'd have been able to say we've got 50 cent of risk. I could definitely add another 100 shares. But because the borrows were so expensive, I just stopped the 200 I initially had at 847. And then we entered a very long period of choppy consolidation. But the cool thing is I had such a nice entry that at this point I've got a risk-free trade. So I can just chill out, let it work, do its thing. The exits maybe could have been a little bit better. We obviously had low of day here at 768. The crucial thing was that there wasn't really any support on this until the lows of 663, which I thought was a little bit ambitious given how low volume it was doing. Maybe there was a sort of thing, if you go to the 1 minute, the 7, the sort of like the initial consolidation, maybe there'd be something there, but the reality is there wasn't really any support whatsoever. So I probably should have held a bigger piece for longer. I ended up covering half of the position because it is up multiple days. It has got the potential to really sell off. I got half the position out when it came down to 750 and bounced. This can sometimes happen when like I've been in the trade at this point for what, like 3 hours near enough. So being in the trade for 3 hours, realizing that at one point I was up 150 and then it goes back, and I don't like holding for excessive periods of time. So when it came to 750 and bounce, I decided to take 100 out. I think I got like 765 in the end. It was quite spready, and then I got the rest out on this dump here, and I got 726 on the rest, which meant I ended up with like a 747 average, which is pretty good. It was bang on. I got 746 in the end. I got bang on a point essentially from my entry. Obviously, the borrows were a bit more expensive, so $200 trade becomes like an $180 trade, but that's just the way it goes. It's not too bad of a price to pay given the strategy works so well. There was one play that I couldn't get a hold of, which was disappointing because it worked perfectly, and which was on GMPX. The thought process here was that once we'd had this failed push, so we sell off at the open, we tried to bounce a lot of, it went through a lot of size that, who knows if it's manipulation or not, but a lot of size came up in the 260s. It went through that. We can see there is a bit of a volume spike in here as it took that area out. Rejected pretty hard, and I was trying to get in 600 shares at VWAP around about 262, 263. The plan was then to add through low of day, and I'd have ended up with I worked out I'd end up with around about 1100 shares. I think I was going to wait until the 250 break, given that was the previous day's low. So I'd have ended up like 1100 shares at 255, and the two targets I would have played off of would have been this area here where it broke out around 230, and then the rest at 213. So I would have taken half the position off at 231 and probably locked in probably close to 150, and the remaining half I would have then got the rest out of around about probably 215, which would have been another 200. So that would have been a huge trade. Unfortunately, I didn't get my first entry, and I don't just chase the breakdown. The risk reward doesn't make as much sense. So super disappointing not to get that one, is what it is. And then the only other opportunity that there would have been on RELI. These were even more expensive. I think when I was looking, they were like $30 for 100 shares, so I wasn't be taking it. But this is a really perfect setup for a stock that is green on the day. We've had this sort of bounce, pullback, bounce. We've squeezed out shorts once. We've then trapped some longs. Big selling pressure comes in. Two opportunities to get in this one short. One here. And then another one in here. Either would have been fine. The first one I never love too much because this is during the first pullback. And I always think in the first pullback of a stock, it always gets a little bit like there's an overreaction of sellers and then buyers come back in. If it holds you up, it can go. So I always prefer not to short the first pullback, ideally. But the win percentage is still going to be, definitely, it's still going to be a profitable trade. So initial trade position would have been like in the 960s. The risk, honestly, would have probably only been to 1040, so 80 cent of risk. And as always, I'll be looking for the low of day to potentially add. Possibly not on this one, but I don't see any reason why not to. I think the win percentage still remains pretty high. And at this point, I mean, we'd be looking at it as a case of, well, I had 80 cent risk. I would probably be up almost a point here, so it'd be around about a 1-to-1. So after the fees, after the borrowers, it's probably like a $60 gain, so it wouldn't have been that much anyway. I'll quickly bring that over here and then show something. The trade that I ended up taking yesterday that was profitable, that was good, was on AFI. This one from the daily chart, it had a bit of a run here and then a big gap up day. So I really like the potential for a short on it. It didn't really do a huge amount early on, but then when it failed to push and it ran sort of into this sort of area in here, this 260, and it rejected, I got short around here. There was no volume in it whatsoever. It really wasn't that good of a trade, if I'm being completely honest. But I ended up catching this dip down here and made back the losses that I took on a couple of very small longs. The only other opportunity yesterday which I missed was on CPOP, which was a nice one. It wasn't super clean. It had a pop off the open, failed, potentially short into VWAP, and it did sell off pretty big, but it wasn't all that good. Just bring over my journal. What I think is really interesting is that the obviously only two winning trades so far this year, which gives me a win percentage of 16% and only down around about 2/3 of a risk. The interesting thing is that the only two winners have been on my short strategy. The only other A grade trade was on another short, which was on CPOP on the day I lost my max loss. There was then another opportunity on CPOP on this day to go short, and I missed other short opportunities. And it made me really question the edge I have in my longs. And when I began looking back through some of my older journals, I realized that in my best months, my longs were performing just about as well as my shorts. And in all the other months, they were breaking even or losing. And I've come to the conclusion that my approach, my strategy that I have for going long, either isn't good enough, doesn't have a big enough edge, or it doesn't suit how I trade, and probably is something that I should stop doing. So for the time being, I'm probably just going to try to short the backside of a multi-day runner. Not as exciting. They'll probably only be in, it's been very, very, but then again, it's been very quiet the last, few weeks, and there has been a play every single day. Some days there have been two. So even in a really poor market for my approach, there has still been opportunities. And back in November and early December, well, early-ish December, there were a lot of opportunities every single day. So for now, I'm just going to stick to the one thing, and I think it's probably the best way forward. It has the best win percentage I've got. I trade it much closer to, much more accurately. Like if I take a short in line with my strategy, um, when I try to take a short in line with my strategy, I almost always nail it. So it makes a lot more sense to do that and just drop order long. So that's what's going to be going on for the next week or two. And I'll continue to gather some data on some gap ups and see if I can find something in there. But yeah, thanks for watching, and hope you had a better day than I did.